Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. And Mosey IR closes on Monday with the exception of a few of the contracts in the hogs. And Matt, let's talk about the rally in soybeans and soybean meal making new contract highs. A lot of that was the market trying to reestablish some weather premium. How much weather premium do we need to put in there from the South American perspective?
You know, we made a new contract high, as you suggested, in meal just last week. I mean, one time, we basically bounced $25 off lows. Then you look at a day like today, and we're $10, $15 higher at one time or another. I mean, the market is just screaming higher based upon fear over, availability of soybean meal moving forward on the world export market. But at the same time, you've got Brazilian meal that's actually cheaper than Argentina, but we don't know how much they're going to have available. That's not their forte. We know that 50% of the world's meal comes out of Argentina typically. I think moving forward, big picture, that might change a little bit. I think there's a lot going on here in the U.S. that might change that. But for the here and now, that's what the market cares about. And anytime you get dryness or talk of dryness, you're going to see strength in the bean meal market first, and then it'll spill over to soybeans. That's what we've seen. Kind of went away from it with some of the rainfall over the last couple of weeks, but here we are again. So I think that it's a gift. I think that it's something we need to pay attention to because overall South American soybean production is set to be substantially larger than what it was a year ago.
So with what you just said and the fact that we're coming up into resistance areas on the charts, are you suggesting sales here?
Yeah, I think so. The thing is that, there's been a lot of concern in the last couple, 3 weeks. Obviously we settled out the year in really strong fashion. And then we came into 23, backed off just a little bit, saw some rain come in. And there's been times, I think, where a lot of producers have sat here and felt like they missed the boat, quote unquote. And what we've tried to encourage them to understand is that these are still awfully good prices, even before this little rally that we started the week with. And so I think the main thing you got to do, Michelle, is take a look at what prices are and then ask yourself, what's the incentives to me being bullish at above $15 beans? A lot of folks can get $15.50 for cash beans. To me, that's an awfully good sale. You probably still have a few left. If you don't want to sell them all, just sell an increment of them. But I have no reason to believe that it would be in my best interest to be bullish at this type of price level.
Right. So the big rally in soybeans, if you're a farmer and you look at the corn market and it's up 1 to 2 cents, you're like, why could we not see corn be a bigger follower of the soybean market today?
There's probably some spread action going on, first of all. Not only spread corn versus beans. I think it's very interesting to see how these spreads have worked the last few weeks. 1 week corn will race higher and the bean market won't do anything, and the next week vice versa. But you're starting out the week with a little more enthusiasm, quite frankly. You're talking about parts of Brazil that this first crop corn is not going to be the greatest. Just maybe 1 million to 2 million tons, though, nothing extravagant. But whenever you start talking soybeans, there's people floating around high 30s for Argentina. I don't think it's going to get that low, personally. I think some of the rainfall we've had lately has kind of saved parts of the crop. Maybe some of it that wasn't planted earliest. The earliest planted beans, from what we're hearing, are toast. They're just not going to be all that great. But I think later planted soybeans could be a lot better shape. You could have a decent crop down there. But overall, I think there's probably some spread activity going on. The corn market had bad inspections. We all know that not only sales, but follow through inspections have to be good moving forward because we've got a lot of catching up to do here with corn.
You bet. Export demand has really been the Achilles heel of that corn market. From that perspective, let's move on to the wheat market. Do you think we were putting in any weather or risk premium from a war perspective in that market at all last week or even this week?
I think there's just a lot of uncertainty that remains. I think people, they just don't understand or know, what can we expect out of the Black Sea region? I was on the panel last week on U.S. Farm Report with Dan Bozzi, and he said that fuel in parts of Ukraine is $30 a gallon. It's hard to get a handle on that. What's that going to mean for production? Are people going to even be able to get a hold of fuel in parts of that country? And so there's no doubt that there's a lot of angst and concern over what you can expect, not only for exports now, but for production moving forward. And I think that's kind of a stabilizing factor. It looks like you're going to have a decent crop in in Australia. But as far as Europe's concerned, I think there's a lot of big question marks. And so world production is certainly not set in stone by any means just yet.
Technically, did we finally put some lows in last week? Chicago wheat hit new contract lows in Kansas City. We had higher weekly close there. It looked like a bullish reversal anyways for the week.
It certainly looked the same way to me, and I've got to think that, with some of the price action that we've seen lately, I mean, obviously the wheat market looked awfully rough, and then you turn around with some of these reversals, and it's got to make you feel better, especially whenever you look over, for instance, on a day like today, and you see soybeans performing as good as they do. Typically, wheat's not going to run hand in hand, but, whenever you see higher closes for the other two, in the wheat market, it's not hard to imagine that we would be trending a little bit higher. Wheat typically is going to follow a little bit this time of year, and I think that that's partially part of the reason why you started out the week with a little bit of strength.
Live cattle futures, we did score new contract highs in the April all the way back through the back end of the board. Was it the higher cash or expectations for higher cash this week, and can we keep that going?
I think a little bit of both. Quite frankly, it's fashionable to be long cattle or to be talking bullish cattle. And so most analysts, I would say, are pretty friendly. And a lot of times, whenever you hear that, people say, "Oh boy, you've got to be careful there. When everyone's bullish, maybe we should be thinking a different way." But the bottom line shows that the fundamentals of this cattle market are very friendly. And so if you can hold the equities together, if you can keep the consumer, from backing away from the table, so to speak, there's no doubt in my mind that these cattle prices will stay very strong. It's a futures market. I think a lot of folks in my seat have been saying third and fourth quarter, you're going to see awfully strong cattle prices, but it's futures market again. So, you might see those sooner rather than later. And so I've got to think with some of these cattle on feed numbers, a person needs to be paying very close attention because, you could be seeing prices, 170 to 180 even towards the end of the year if this type of fundamentals continue. And I think they will. Hey, if these pastures heal up and some of these guys are retaining heifers and gals are retaining heifers, good night. You could be looking at some awfully tight numbers even yet.
Yeah, we should get more confirmation of that here in the inventory report tomorrow, I would think. Finally, hogs, did we finally put a reversal in that market that we can build on here or not?
It sure seems like you look at the chart here on hogs, other than the front month is just atrocious.
Yeah,
But,
don't look at
you
that
get
one.
out to April and it's just a roller coaster, an absolute roller coaster. It looked like you maybe found a little support there last week. I mean, can you
Okay.
get back into the 90s? It might be asking for a little much, but it wouldn't surprise me whatsoever. I just don't think you'll be seeing triple digits in front months anytime soon.
All right, thanks for joining us. That is agmarket.net's Matt Bennett and Markets Now.